We are just here to understand a little more about the GST aspect. So, as we know, GST is an indirect tax. What do we mean by indirect tax? Where the incidence of tax is on a different person and the burden is on another person. That means, though you are paying the tax to the government, you are not paying out of your pockets. You are going to collect it from somebody and then remit it to the government. So the ultimate burden of tax is on the ultimate person, like most of the times it is the end consumers like us, most of the times. So now today I'm largely, let me touch upon areas where due to the recent amendments in the GST, whatever has come up as a part of the giveaway Diwali gift given by our Prime Minister on 15th August, whatever he had announced, the 56th Council of GST has come up with reforms. So how is it going to impact us as common people? That is where I want to touch upon today. So most of the cases we had confusion as to where our item is placed. Like we had 4 rates earlier. So largely we had 4 rates: 5%, 12%, 18 and 28. So we were confused as to which tax slab to choose. But now the government has rationalized for many places where it has given us a clarity as to which tax slab we fall into. Now where there are 3 tax tiers, one is 5%, 18% and the last one being for few cases for the luxury items and etc. that is at 40%. So the main intention of the government here is to reduce taxes to the common people like us. So let us start with few areas where it is impacting us. So now first let's talk about insurance and health sector. In insurance, life insurance, personal insurance, GST is completely waived off. So let us, next time when we are taking our policies, we should be sure, are we paying less? What is the impact on us? We should be careful. And next, medicals. GST is removed on 33 life-saving medicines and also it is reduced to 5% in many other cases. Food products. This is something we can't do without every single day. So here we have a rate reduction in multiple places. Say UHT milk, it is reduced. We were paying tax on the UHT milk also earlier. Now it is gone. It's at 0%. We don't have to pay tax. Many other items like paneer and so many all Indian breads, rotis, chapatis, all that also we were paying tax earlier. Going ahead, we don't have to do that. And our basic essentials, everyday what we deal with, like our shampoos and all that accessory, all the basic needs have been reduced to 5%. Earlier we used to pay a tax of 18% and 12%, now it has come down to 5%. And processed food, all the namkeen, bhujia, where we need at least twice a day with our chai, all those items also have been reduced to 5% from either 12 or 18%. Electronics and and automobiles have become more accessible for us. The cost on that have been reduced. The ACs and all that were taxed at 28% earlier. Now it has come down to 18%. Vehicles prices have been reduced on many sectors, almost all the sectors of bikes and all. It's come down to 18% from 28%. And the cars up to 1,500 cc has also come down to 18%. Earlier, the luxury, even on the luxury cars, though we say it is at 40%, there also there is a reduction. Earlier it was 28% plus 22% says, now it is 40%. So there also it's a reduction where we have to make a note of. Next sector being textiles and where the raw material prices have been reduced here to man-made fiber and yarn and all that has been reduced to 5%. And okay, how is it going to help us directly? Earlier on products with MRP greater than 1,000, we used to pay higher tax at 12%. Less than 999, we used to pay 5%. Now up to 2,500 rupees, it is only at 5%, and after that the increase is applicable. Luxury life comes at a cost now. Agriculture and other service sectors like our gyms, spas and all that prices have been reduced. There also earlier it was at 18% and now it has come down. And later the hotels. We used to pay a tax for all the hotel accommodation where per day rental accommodation is greater than 7,500. There it was 12%. There also the rates have been reduced. And agriculture, many farm vehicles, tractors, everything the rates was at 12% earlier. So the farmers, it's been more accessible and the rates have been cut down to farmers as well. So there again it is 5% now. Okay. Now let's talk a little about the business perspective. Inverted duty structure. Here, what happens is when the end customers, the selling rate, the output GST for people is like 5%, whereas the input raw material is coming at a higher price, like 12 or like 18%. What happens? More of the inputs is accumulated for them where the output is less. So the input that becomes a higher cost. Working capital crunch will be there for business. This is what is called as inverted duty structure. So here in the latest GST reforms, the government has come up with a provision to refund upfront 90% of the inputs lying with us in terms of goods for the inverted duty structure. That is again AI driven and the process is yet to be in place, but at least we have got some relief in this area.
What is the timeline for that?
For which, sir?
90 days, 90%. Within how many days will we get it back?
That is still, that's what, like I said, the process is yet to be implemented. The provision is in place. That the government is again will assess the risk. It is also AI driven. They will do checks and then only it will be approved for you.
Now, can you give us some examples for this inverted?
Inverted, yes. Sir, come down. See, first is textile, where the inputs are very high and later the outputs is less. And
for example, if it is a cotton, it is at 18%.
okay, I'll tell you.
Like
Let us go by paper. Paper, like Sandeep sir and all are not here. I think sir is not. See, what happens basically in sir's case, I'll tell you. For an input comes at 18%, paper. But books, it is 0. So there the and since it is 0, also the machinery, everything will be very expensive for them. Since there is no output, there is no possibility for you to utilize the input that you have taken on your raw material, also your capital goods, like that. So now, one good news for all the budding entrepreneurs, there is a easy registration that has been announced wherein the GST might be auto approved for cases where like the outflow, monthly GST outflow is less than 2.5 lakhs. So small businesses are going to get this leverage going ahead. There is volunteer opt-in opt-out facility also that is going to come up. Maybe this will be applicable from 1st of November. So now the aim of the government is simple tax, less burden on the common people is what is the target. Any question?